Good morning, traders and investors. Todd Gordon here. It is Wednesday, the morning after the election week that it's become. How many of you guys got less than, let's say, 3 hours of sleep last night? Wow, I'm going to call a little bit of an audible here. I'll take you through some charts, kind of tell you the way that I interpret that chaos last night. But let's bring the team in real quick. I want to make a quick company announcement, and then we'll jump back in. Bennett, will you, sorry to throw you off and call an audible, but we bring the team in if possible. Guys, I have a company announcement. We are no longer going to be in the stock market, education, analysis, forecasting business. We're all going to become pollsters because
I love it.
We can do a hell of a lot better job than those guys and probably make a ton of money. What do y'all think about that? You guys want to make that move?
I think the odds are in our favor.
I'd have to agree with Terry on that one. It's been interesting.
If we were that bad at our job, we would be out of business. It's like, obviously I'm going on about 2 hours of sleep, I'm a little delirious, but it's just unbelievable. I just want to get a quick reaction from you guys, and then I'm going to go back and reclaim some of my time, Senator. How much sleep did you guys get last night? I said, Terry, I know you went to bed at a decent time. Bennett,
yeah, I
stay up or
11:30.
I stayed up a little bit, but I got some decent sleep.
All right. Yeah, unbelievable. But yeah, look, I mean, the markets are hanging in well, unbelievable. Switch, turn-in events. It's amazing that, that they were convincing of us of the outcome going in one direction. And then Florida came through and everything changed. I was tracking the odds in real time over Trump and Biden. And if I spent a little bit more time, I think you could have overlaid the futures markets, specifically the NASDAQ, on top of the betting odds. It was unbelievable. One thing that I was noticing consistently early on was a strong bid in bonds. And, bonds were going strong. Yields are dropping. I thought that was kind of interesting. I didn't know if that was sort of a risk off kind of thing and that it's going to weigh on markets. And it was trying to. But it was really foretelling early on that the markets were starting to see that Trump was going to pull ahead, and that would be maybe a slightly less large stimulus than Biden would have put through. There's a lot of movement in the foreign exchange markets. Dollar MEX was really ripping at about 7:30 p.m. last night. Let's kind of go into the charts here. Let's just kind of interpret some of the madness last night. But again, I'm very proud of the markets right now, the way they're holding in. Futures right now are up. NASDAQ's up 3.6% in the pre-market. Dow's up 0.5%. S&P up 1.7%. Gold still just boring around 1,900, whatever. Crude hanging in there. And then bonds up, 30-year bonds up 1.3%. So definitely long end movement in the bond market. So let's just kind of start there, and I'll jump in here. So this was about 7:30. You started seeing a pretty good move, and I think Florida came out around. I gotta see, maybe 8, 9 o'clock. I think when we finally saw that Florida looked probable with that Northwest Panhandle still to come. But the bond market bid was quite interesting. I did CNBC yesterday, and I was kind of showing that there was a similar sector rotation. I'm looking forward to Terry's part as we get in here. Financials, there was like August to September heading into 2016. Technology was rallying, but then tech sold off. And then we started to see a rotation back into industrials, materials, and a big bid into financials. And this was in the weeks heading up to the 2016. Actually, no, excuse me. That was immediately after the results, after Trump won. Then we saw that big move into financials and the bond market. And so I started thinking last night, I was like, oh, wow, are we going to start to see this rotation again as we're seeing, such action in the bond market? But what's happening is bonds are going up, yields down, not good for financials. And it's really just kind of good for technology. And I think either way, guys, I think tech was going to be bid. I didn't do much in my portfolio really at all going in. I did buy some Qs last night. I put it out on Twitter. It was an official trade alert for TradingAnalysis, but I did add some Qs to my position last night. NASDAQ is held in extremely well, and I think it was going to go well either way. I mean, I think, lack of too much regulation on a Republican presidency, and of course it depends on what happens in Congress, would kind of be free to, suppose a little bit more hands off, even though Trump came into Google with antitrust. I think the Democratic-led government would be a little bit more pro-tech. They've got a better relationship. I think the technology market was going to go up either way. So those guys acted well. S&P's just kind of pressing highs. Small cap is doing okay, not as good as it should. Gold market kind of got a bid, not as much as you'd think. If bonds were moving as much as they should, I would have, as much as they would, I've expected gold to make a bigger move. So I don't know. It's going to be a couple weeks before we know anything. But I don't know. I think it's business as usual, unfortunately. But again, I'm really encouraged by the way the market is handling uncertainty. I wouldn't blame the market at all in an uncertain political environment, which could be a week where it just absolutely gets smoked and until we figure out what's going on. But I think it's business as usual. So let's bring in the team. I know it's not much of analysis there. I think we're all just kind of a holding pattern here. Guys, what do you think after those very incoherent 2-hour sleep ramblings?
That sums it up pretty good, Todd.
Thanks, Terry. I appreciate you going easy on me. What do you think? You always have a good insight on things. Any takeaway in your end?
No, everything you said is kind of the same way I was seeing it. I didn't actually go back and spend the time to analyze the pre-2016 and post-2016 moves, but yeah, that certainly plays for it. I think the market will settle down. It's all about the uncertainty. Now, we still have uncertainty for this next week or so. I expect volatility to continue. Once we get past whichever side gets it, I think we're going to see volatility start to shrink back to manageable levels there.
I think that's a valid point. I really am interested to see where the VIX goes here when we open. I really do think, because we've settled into a nice normal low of a 25 VIX, which you guys remember 2 years ago, the support in the VIX was 12 and 13. So we're definitely in a higher volatility regime. I wonder if we get through this, do we start to drop back down? So yeah, I don't know. We have some earnings coming up. I think we have Qualcomm and Match, two of the positions that we're holding. We do have some movement here, but I don't know. Would you want to roll in, Bennett, and start to take us into the do you want to take us in, do some sector analysis and kind of show us, some index analysis, kind of show us where we are from an LA point of view, maybe?
Yeah, absolutely. I'd be happy to bring you guys up to speed here. So let's do it. Let's jump over to the Motive Wave platform. Good morning, YouTube. Thank you guys for joining us. I'm sure you're a little bit tired if you stayed up and kept yourself busy with everything going on last night with the election. So interesting move in futures there. It was interesting when the betting odds actually turned in Trump's favor. We saw a pretty substantial rally in NASDAQ futures and S&P futures. So we'll see how we kind of transition here into the open, but let's jump into it. We'll go full screen here on the good old Motive Wave platform and take a look at our Elliott wave count. And if you tuned into the show last week, we were looking at this particular wave count in front of you, which suggested that into the September 2nd highs, we actually completed a 5-wave motive impulsive advance, and that originated off of the March low. If you go back about a month, we talked a little bit about the psychology associated with the lack of clearly isolated corrections within this particular impulse. Kind of to be expected when coming out of such a significant move to the downside. So let's get off the daily chart, and what we're going to do is we're just going to focus in on everything that I've got highlighted here in this circle. So just to kind of put it in context for you as we get off the daily chart and drop you guys down to the 1-hour time frame. And going into the open last Wednesday, we were tracking a wave count here, which suggested we were going to see a move down towards 32.55. That was our initial downside objective, and then 32.30. As you can see, both of those price levels were met, and we have bounced quite significantly off of that bottom on October, looks like the 30th there for the S&P. So far, at least going into the close, all we had evidence of was simply a counter-trend directional 3-wave move. And what's really interesting here is if you take a look at the, let's see, let's bring in the resistance. If you take a look at the 34.25 price level here in the S&P, you'll notice that it's a fairly significant level in that going back to September 10th, we attempted to break through it. It held as resistance. It also held as resistance on September 16th. We had one final attempt and failed kind of here on September 6th, ultimately broke through it. On the way back down, however, you'll see that we had 1, 2, 3 attempts to hold that 32 or 34.25 as support. That ultimately failed and gave us that continuation to our downside objectives. What's really rather interesting is, coincidentally, that price level actually corresponds to an overall 61.8% Fibonacci retracement of the decline that took you from the October 12th highs into the October 30th lows. So if we were to just put a simple fib retracement on here and not even take a look at the wave structure, you'll see that that 61% retracement level corresponds to that 34.25. So we're essentially existing between an area of support and resistance. It's certainly looking like a potential open to make a fifth wave here, which could entertain the idea that the 5-wave structure into the October 30th lows, excuse me, actually completed this C wave structure. Now, it did come a little bit short of C versus A projections, but overall we do have the required subdivisions to suggest that that is complete. So that takes you back to the idea that we are going to actually rally in through to new highs here into the new year, which is a possibility that we've been watching following this kind of 3-wave correction. So the way I'm looking at it is, if we do in fact hold that zone as resistance and start to turn lower, perhaps we don't have clarity on the election here for a few days, and the markets get a little bit concerned, then perhaps that zone of resistance does hold and gives us the move down to the 31.22 to 31.75. But ultimately, we see this correction as resolving higher. So the way I'm looking to trade this and navigate this over the next few sessions is to keep watch on this upside resistance zone. If it holds and does turn lower in an impulsive fashion, then perhaps we can look to those downside objectives. But so far, we've met the 32.50, we met the 32.30, bounced to support, and actually looking quite good here into the open. So we'll leave it at that. I don't want to take too much time this morning. And just to put this particular wave count into perspective, if in fact we did complete that 3-wave move, we can look for this 5-wave structure to be met with some sort of a 3-wave correction. At that point, I think we'll have confirmation of continuation to the upside there. So keeping watch on it. It's going to continue to get interesting, I think, here as we open, and we'll see what the elections have to bring. Back over to you, Todd. Thanks,
Bennett. Can you flip my screen up here? I think we got a minute or two left in the segment before we go to break. Bennett's got a tough job right here, and I think you guys know that. Elliott is near and dear to me. It's how we get context in everything that we do. This is a very tricky environment right here. This right here, this correction heading into this election, it really is very tough to get to fit within the Elliott wave theory, because it's much deeper, it's much longer than anything that we've seen here, and it's hard. For me, this is fine, but just look at the depth of wave 4, you look at the depth of wave 2, they don't look to be of the same degree. Is it 5 up and this is going to be ABC in wave 2? If that's the case, we're going to have a ripping rally. It's really challenging. Bennett's in a tough position. He's more or less the head Elliott wave guy now. He's better at it than I am. But it's tough. And I just, I think there's got to be times where you got to step back and say, look, I don't know what the wave count is. And I don't want to put words in Bennett's mouth. Bennett, can I just go back to you with the time we have remaining? Do you feel that way? Am I putting words in your mouth that it's really hard to get context right now? And that doesn't mean that, throw Elliott wave away and it's useless. It kind of alerts, for my opinion, outside of just this specific example, is it gives you an idea of when you perhaps don't have a good feel for the market, and it's not a time we want to get super aggressive. Am I putting you on the spot there? Where are you? No, absolutely, Todd. In fact, I was actually going to mention this during our member webinar this morning.
currently, looking at the wave structure here in the indexes, I don't think one should really be approaching this market with even a preferred interpretation. I think your best approach is to approach this with possibilities at this point, because we do have multiple valid possibilities from an Elliott wave perspective. To your point, and it's been a bit tricky following that September 2nd high. So no, absolutely, you're completely correct.
It takes a mature analyst and a mature trader to say, look, I don't know what is exactly going on here, and it's not a time to risk a ton of capital. We haven't been super active in here in the markets, and I think that's a very prudent thing. I'm setting up portfolios for the money management business coming out. I've got existing clients with existing portfolios. There's not a whole bunch to do right here, and I think with there's so much excitement going on around, earnings season as well as the election, and so much going on, you just got to kind of divorce yourself from all the news flow and say, look, we're kind of in a sideways, I hate to say it, sort of a boring sideways market. It's hard to kind of realize that until you take a step back. So anyways, time for our first commercial break. We will be back right on the other side with sector rotation I'm looking forward to this one. There's been a lot of rotation with Terry. So back in just a little bit, guys.
Hi, I'm Todd Gordon, and I can't believe it. It's been 8 years since I launched this business, and what a ride it's been. Welcome to TradingAnalysis.com. We're one of the leading education, analysis, and trading alert companies on the internet. We are a team of devoted professionals who trade our capital in a live, transparent manner to show you what the life of a trader is actually like. Keep in mind, this is an industry filled with smoke and mirrors, with cheap sales and marketing tricks, so it's been my mission to run an above-board, transparent, and brutally honest operation to serve our clients in the best way we know how to prepare them for life in the markets. Every single day, we offer video and written analysis for the major trading markets, including stocks, stock options, cryptocurrencies, and Forex markets. We offer live and clear-cut and actionable trade alerts in these markets, and they're sent straight to your cell phone and posted in the members area on Trading Analysis. Once the trade is out, we certainly don't leave you hanging. We follow up on every trade, whether it's a winner or loser, and we'll conduct post-trade forensic to show you what went right, what went wrong, so you learn. And very soon, I'm going to be sharing my real-life seven-figure portfolio with our members who prefer the longer-term investment timeframes with some medium-term trading and option strategies mixed in as well. So head on over to TradingAnalysis.com after this show is over. Take a trial today and join us in our community. Let's get back to the show.
All right.
Take it away, Terry.
The silence was deafening there for a moment. Hey traders, I'm Terry Long. Here's your weekly sector focus. This market data, obviously, for the week ending October 30th, the last two bars here, Monday and Tuesdays. Price action. Inside this red box, what I call is last week's big ugly. This was the index's largest weekly drop since the market hit its all-time highs back here on September 2nd. Similar in price movement here, both on the S&P and on the NASDAQ. Although I think the NASDAQ looks to me like a little bit less of a corrective move than it did back here at September. Now, all 11 sectors were down big time last week. Even our in leading quadrant, the industrial sector, it was really hit the hardest last week, down 6.5% on the week. Also, discretionary and technology also took big hits, down about 6.5%. Healthcare sector down, the S&P down overall about 5.6% for the week, and NASDAQ similarly. This move off, and Todd and Bennett just got through discussing this move. To me, looks like some kind of correction. It's down in A, up in B, down in C, and then the big question we're talking about is there a little bit more correction to go? We know futures are going to take us a little bit higher here on the market open, but we still got room for another consolidation, or we go higher from here. So I don't know. Are we seeing an about face turn in the sectors? Like I said, if you look at Monday and Tuesday's price action here now, this is the sector performance so far. And look here, we had a big bounce back in industrials and materials, and financials, like Todd was talking about, followed by real estate and utilities. So big roller coaster ride going on right now. And looking at these pre-market futures, seems like there's going to be more gains in the works today. All right, with the rollover of October, we're going to switch this to a monthly, take a real quick look at our monthly rotation. There's not a lot of movement here, obviously, because we're talking, this is for a long-term investing horizon. But it is interesting to note, if we just animate this rollover here, this very last bar. So that's the month of October. The month of October performance saw technology start to lose momentum. It saw discretionary gaining momentum, healthcare continuing to decay, communications kind of sideways here, not really in the monthly charts, not really making any additional gains. Okay, so I think that momentum decline in technology is a bit more apparent than what we're seeing now. Take a look at where industrials is. In the monthly rotation, industrials has been sitting down here in this lagging quadrant. But when we take a look in our weekly, we will show you that in the weekly rotation, industrials is actually one of our leaders here. Now, similarly, there was a little hook formed here last month in utilities. I saw this little pop-up, and I saw the pop-up in industrials. So I thought a similar formation. But what I'm seeing now, actually, utilities had some further decay. Let's go ahead and switch this back over to the weekly, which I feel is more appropriate time frame for our intermediate term traders. And let me scale this back in here. So last week's broad correction did hit all of the sectors almost equally hard, but it hit industrials. Really, industrials, believe it or not, was the worst performing sector last week. But you can see a continued momentum decline, maybe actually a little bit of a relative strength turn. So even though it was declining over the week, industrials remains in our first position. Now, I'm going to animate this. Last week I showed you the inertia, or the resistance to motion here on the materials sector. It's really stuck tightly, holding its relative strength. And with this last week's move, this is going to represent Monday and Tuesday's price action only. And of course, today we know we're more than likely going to see further gains. But I'm seeing an acceleration move back towards the leading quadrant here in materials. All right. But we are seeing discretionary chasing technology and communication on the border of moving south. So the rest of the week we'll see if we do get this rotation back into technology. But I haven't seen it. It hasn't displayed itself yet as a hook. I'd like to see that hook. We could see a hook. We could see these guys rotate back up. They're just not forming yet. Now over here in their underperforming sectors, though, you can see a lot of momentum rising, especially here in utilities. Okay, we'll talk more about that in just a moment. I'm going to give you a quick look here at growth and value. This is the daily growth chart here on the right, and we'll animate it back and rotate in for the last 5 days. So last week with the big ugly that happened, we can see that value stocks actually did, on the daily rotation, push over into the leading quadrant, and the growth stocks push into the lagging. But if we take a look at the weekly charts, you can see that growth is continuing to decay and value is gaining momentum. But there's still a pretty significant difference between the two. Now, rotation, these guys continue this rotation. We could see these guys roll over. I have also seen times where these orbitals can actually short circuit and take another trip back around before they decide to come full circle around the poles. So that'll be something we'll be watching. All right, this week we're going to focus on the utility sector, which has seen this rapidly rising momentum. And like I said, of the underperforming sectors, the utilities and staples are both seen with with this rising momentum here. This is Staples, sorry, right there, that one there. This was Staples. And I did talk about these last week. Many value stocks are in these sectors, and this rising momentum is, you know, it's some evidence of the value stocks starting to make some gains over the growth stocks. However, these sectors have yet to return to full market leadership. So we're going to remain cautious about moving wholesale into value stocks at this time. I'm going to switch over here and show you the utilities real quick. So this is the top 20 by market cap, and you can see nearly every one of these stocks has got rapidly growing performance there. This display, once it loads, give me a second here. So the utilities group is divided into 4 industry subgroups, and that is conventional electricity, which is here on the left. We've got gas distribution, we've got a group called multi-utilities, and then we have water utilities. Now, generally speaking, the majority of the stocks in this sector are actually underperforming the S&P. That means they're to the left of this 100 mark, right? So the majority of these stocks are still underperforming. Let's take a look here at this first industry, and this is conventional electricity. And so inside here, you can see this huge momentum rise on many of these stocks. And although they are still in this improving quadrant, there is significant buying interest here. There are a few stocks, however, that already migrated across the border into the leading quadrant. And we even have this one stock over here called Vivo Power International, very far out here to the right, exhibited some very strong relative strength ratio, but currently a very long tail. Look at this. This is 1 month. This is 1 month's length of tail. Compare that length of that tail to some of these other stocks here, right? And based on this, I would suppose that this stock is in a period of consolidation, right? It's not been losing a lot of relative strength, just simply momentum. And let me quickly open a chart here and show you what I'm talking about. And yeah, you can see that this stock, you know, had a very steep rise. It looks like it peaked here, and now it's running back down in consolidation. Possibly this is down in A, up in B with a flat, and then down in C. And we'll see how the market opens. But yesterday, this thing did bounce and bounce back up pretty significantly here. It did cross over the 50-day, or under its 50-day moving average, but that price action is pretty optimistic. We'll ask Bennett to do some further Elliott wave analysis on that consolidation for me there, please, sir. I'm going to switch over here. This is gas. I don't really see too much that's interesting here in the gas, but I'm going to switch over to this multi-utilities group. You know, once again, a common theme of northeasterly heading in all of these stocks. You know, there's a few that have already established themselves over here in the leading quadrant. And let's take a look here at WEC Energy. Here's what I see here. I see actually a nice continuing price structure supported by its 20 and 50-day simple moving averages. Not quite broke out above its pre-COVID high, but very close actually. Let's look at another stock here. Let's look at, let's pick this one. This is CenterPoint. So CenterPoint Energy. So yes, CenterPoint's also over here in the lead. The difference I see here is just now, middle of October, has the 50-day crossed over the 200-day moving average. Price is still being supported by the 20 and the 50. But it's got a longer way to go to get back to its pre-COVID highs around $27. We're sitting here at 21 today. So I'm out of time, guys. Hope you enjoyed that detailed look in the utilities sector, and I'm going to give it back to you, Todd.
Good. Thanks, Terry. Yeah, good work. Utilities really got strong, and and I'm telling you, I think Terry is, I don't know, maybe Terry's the rotation expert, but understating the performance of those materials and industrials over the last couple of weeks. They were starting to say that, that perhaps the reopening trade, maybe it's infrastructure build out on a Biden win. I don't know, but there was definitely starting to, I think it was understating Trump's possibility of potentially taking the election. There's something that just came out in the betting markets. He's now at a 20% probability of re-election. So we'll see. But, there's been some really good material stocks. We talked about it on CNBC yesterday, like IP, International Paper, Ball Corp. There's been a few others in there. Industrials have been doing really well. We've even seen some rotation into some airlines. Caterpillar's been doing well, sort of on the back of the reflation trade out of China. So there's been some interesting rotations. Let's go over to Alex on the macro front. Lots going on there. Alex, get us caught up in the FX crypto macro side. Good morning, sir.
Yeah, good morning. Good morning, traders. So let's do a quick recap of the macro markets, Forex and cryptos. So let's start with oil. And currently in this environment where the almost more than half economies are shut down from a COVID second wave, I will still not look oil to go above this previous 41 levels. So I'm still going to exercise the possibility that the first part of this correction move down, where we reached actually equality, we were actually short oil for the last few weeks. I think we might see a partial recovery in some type of an X wave. And then I think we're going to follow through to our second support, which is around 3130 levels. So I don't see this move up still substantial to kind of turn bullish on the oil. So looking the environment, I will give it a possibility for one more push lower, which will actually be a complex corrective pullback, or what we call in the Elliott wave a double zigzag, and it will consist with another ABC move lower. So oil get a kind of a boost yesterday. Oil stocks were also both from this 33 levels on oil. So we see a little bit move on the upside. So I think some of the participants are looking to be oil long for the longer term. So I don't think these are the shorter term entries. Looking the environment, our dollar index wave count is still holding pretty much sideways consolidation. Not much, surprisingly, not much of a volatility in dollar, which is surprising. But for now, our wave count is still holding these key support levels. I'm going to still look further for a move up in dollar. I'm looking for a 96, 98 levels. So somewhere around this zone, we might see this secondary zigzag continuing on the upside. But overall, I think when this corrective pullback is over, dollar will take another dive, at least for a measured move to the downside. And looking the whole picture, we can count this as a complete five-wave move here. This is the ABCWX, and we expect another ABC to follow through. And then we are seeing potentially from January, beginning of 2021, a dollar dive to lower levels. So let's look a little bit what's going on in Forex markets. So if we flip our dollar index chart to euro, euro is pretty much following our script. We were looking for a deeper corrective pullbacks, again in a double zigzag, posting 120 highs as a wave A or 1, ABC down for W, 3 waves up in X, and I'm looking for another move down to 114, 115 levels, where I think actually euro will post at least a midterm lows and will continue to higher levels. If we look at the daily chart, there is many support levels around this 114, 115 zone. There is also 200 moving average on daily. So I think the kind of a logical technical place for euro is to make another low and basically turn out on the upside here. We had the ECB last week, a big recalibration of the current envelope of the stimulus is going to be done in December when they get the final statistics. But European zone economies are not especially good. Inflation is below ECB target. So I think this will be the logical outcome. And I think the move up in euro will be a dollar move, not the euro move on the upside in the beginning of 2021. We can look just for a moment this Aussie dollar. And Aussie dollar is actually, I think, in the same double zigzag. So as you can see from lows in April, March 2020, we have a 5-wave move on the upside. So a simple double zigzag, ABC up in X, and I expect another ABC. So some of the currencies which are also on the commodity side are telling us that we are going to have them higher in 2021 as we look this through our Elliott wave lens. So 5 waves up, complex correction down to 0.68, and then continuation on the upside in 2021. So let's look a little bit of cryptos, and cryptos is interesting because the only crypto actually that made a higher high was Bitcoin. And here we still are juggling around this 127 possibility for a B wave in a flat. So this is a red count, which is usually one of our preferred counts. And I'm waiting here to see a further development. In the case we start moving a little bit higher, I don't think Bitcoin has much room on the upside before a larger correction. I will then ascribe this as a complete wave, orange wave 1, pullback in the ABC down to 10,000 levels in the wave 2. And then also we are projecting Bitcoin in 2021 to go higher. So as you can see, in a different markets, we are seeing basically the same picture in 2021. All of the currencies which are on the risk on side and a Bitcoin should go higher and dollar should move lower. If you see the other cryptos, today the crypto board is pretty red. Some of them are even 7% down, which is a kind of a usual stuff for cryptos. But if you look also Ethereum is moving lower without surpassing these highs that we talked about. As you can see, Ethereum didn't surpass this high. So Bitcoin is outperforming, and I think Bitcoin will readjust soon and move lower to align with other cryptos more or less. And also the dominance chart we analyze with our members are also point to that scenario. And I will just add this Ethereum Bitcoin chart, which we looked last time. We are still looking for a possible reversal here. We are now probing our key levels here. So if we see a reversal here, you will see a sharp drop in a Bitcoin. And on this Ethereum Bitcoin cross, we will see a move in this fifth wave up for the blue wave 3. So we are waiting a kind of alignment of all of this, what we see. But for now, it's going in a direction we kind of thought of, Todd. So back to you.
Okay, thanks, Alex. Interesting. I think a lot of people are getting very bullish on crypto on that simple trend line break, and then Alex steps right in front of there saying a 5-wave move, not so fast. Don't be buying it. I was wondering, Alex, I'm just watching dollar MEX, which was a big mover on the back of the election, and you mentioned commodity currencies, dollar MEX, and I know dollar yuan. I was wondering if you were going to say anything in that based on last night's action, but it looks like dollar MEX rallied up, which is buying of dollars, selling of MEX, which is a sort of a phenomenon we saw in 2016 when Trump was starting to gain traction, ultimately when Mexican currency sold off, obviously for sort of protectionist approach that he may impart. But dollar MEX rallied sharply last night and then just sold all the way back down to where we started the night. So it was like a big round trip. It went up 2 figures, like 21, or actually 20, one figure, 21 up to 22, back down to 21. So interesting. You know, it's always good.
Actually,
yeah, go ahead.
Yeah, we actually track dollar RMB with our members, and dollar RMB actually dollar weakened against the RMB for the last few weeks, but now we are seeing a 5-wave sequence done. So it was a little bit volatility, but not that much as in dollar MEX. So we are still going to look for a dollar higher from here, at least in a corrective mode in the RMB. So I'm surprised by the relatively low volatility in FX. Maybe this will get going in the days ahead, but for the election day was not so hard as I expected, I must admit.
Yeah. Yeah, it was nothing like what we saw last election. I mean, nobody thought, everyone was listening,
far away.
Everyone was listening to the polls and expecting Hillary to just walk away with it, and Trump shocked the world, and that resulted in unbelievable volatility. I knew this was going to be a tight race. I didn't believe the polls. I was, you know, it's like I just, the blue wave, and when everyone convinces you of something that's imminent in such a mass scale, like an election like this, or something that's going to happen in the market, I always look the other way. So I was not surprised. I traded a little bit of Qs last night, didn't do much, but you know, I really believe this was going to be a very tightly contested election. So, you know, I think as I said, sector rotation is really important. I think technology is in a very good position to continue to do well under either Trump or Biden. Either way, I think technology is where we want to focus. You know, Biden's got, you know, big plans for major stimulus. He says he's going to do infrastructure. Maybe we're seeing some materials and industrials and so on and so forth, you know, seeing some rotation into that. You know, and a split government is ultimately the best thing for the market. So I'm, you know, from a stock market point of view, of course, I have my own beliefs, whatever, but from a market point of view, I'm not overly concerned. We certainly have to see what, you know, if Biden does come through and it looks like he's going to pull this one out. We got to look to see what higher capital gains is going to do. We're going to have to make some plans on that end. That's going to be certainly interesting. And, you know, if we got to watch to see tax loss harvesting in winners, to see if there's any of that in the next couple days. If it looks like Biden is going to pull this out, are the stocks that have done so well and people want to pay the lower capital gains right now, if that starts to develop, usually in tax loss selling, you sell the losers to offset the gains in your winners. But it's the one thing I do want to watch, and I think ultimately if Biden does pull it off and we do see tax loss selling in the winners, that ultimately presents a buying opportunity. So from a longer term portfolio management, I'd like to see leave some cash on the sidelines there to pick up any winners. But I do think, you know, we will be fine. I'm not overly concerned here from a market point of view. Guys, closing thoughts. What do you think?
Yeah, just to mention, ADP came positive now. So we have an NFP on Friday and we have a Fed tomorrow. So interesting week overall. Yeah.
Yep. And then and as far as earnings, I do know we have Qualcomm coming up. That'll be an interesting one today after the bell. Humana reported, not too much else that we're looking at here just over the next couple of days. Match.com will be interesting. That's a holding of mine in our portfolio. That'll be after the bell. That stock has done extremely well in this stay-at-home, work-at-home environment. And the other thing too, you know, I think we all like trading these stay-at-home, work-at-home stocks. Again, if Biden pulls this out, I think regulations on masks and you know, I think it's going to extend the stay-at-home, work-at-home, and the trade that I think we've all enjoyed so much in these high-flying, crazy stocks on the tech side. I think will probably continue to go. So we'll just kind of watch that, guys. Closing thoughts before we send them on their way here on Wednesday.
No, I think that about covers it. I did see one question. Somebody had mentioned that ABC correction I was looking at in the indexes could potentially be some sort of a 5-wave triangle. And if that's the case, we should still maintain the October 30th lows.
Yeah, let me add.
It could
Yeah,
be.
sorry.
It could be. It's interesting to have B as a lower high and C as a higher low to make it all of a correction. So, in this, you could actually go and say, is the Elliott wave pattern starting to foretell a triangle against which correction? I don't know how you square it. I don't know what the higher degree count is in the triangle, because it'd be massive compared to anything we've seen since the March lows. But regardless, that being put aside, is the Elliott wave count telling us that we're not going to have any resolution for this for some time? Is that triangle starting to tell us we're going to the courts over the next couple weeks or even a month? I don't know. I just want to throw that out there. Tell us what you think in the comments. Terry Bennett, anything else we left off there?
Hey, we left a lot of stuff off, guys. If you want more of the kind of action, you need to give us 2 minutes over to TradingAnalysis.
All right,
we're
going to put a wrap
on for hours.
Yes, we can. We are going to go on for hours in the member webinar here in 28 minutes after we all coffee up and take a look at the opening here. Let's just survey the opening here real quick. NASDAQ up 3.3%. Bennett, will you just throw it over here? We'll get them updated on the opening price action here. Do you mind? And then
absolutely. Your presenter, if you could take the screen and I'll drop us in there.
Yep. Screen number 4. Perfect.
All right, here we go.
Bennett's a master at running this. So just looking at the price action here in the open, it looks like if we sort by percent change, XLV, look at that. Healthcare leading the way. I think that spells Biden. That's a big 4% move in healthcare. NASDAQ up 3.5, communications, tech, S&P, discretion, staples, transports, real estate, industrials, utilities, energy, materials, financials. Big move in XLV. With the Qs kind of closely behind. Let's take a look in the healthcare, just kind of handicap this quickly. XLV, stretch it out. Terry made me increase my font size so you guys could all read. I'm not used to it. Cigna up 10% on earnings tomorrow. AbbVie, Anthem, UNH, Bristol Myers Squibb. So huge move there. Let's take a look at the XLK. I just want to see who's moving there. Adobe, ServiceNow, Xilinx, AMD's up 5%. This is a big tech and healthcare move. I've had some fun people.
They've been down for the last week and a half, so it's.
Say it again, Terry.
Yeah, they definitely need a little bit of recovery time.
Yeah, that's for sure. Having a good day, coming back here, just looking for some notables. Qs, XLK, Apple, DocuSign, AMD. It's a pretty good tech trade in here with some healthcare. We got to see what's going on there. All right, guys, we're going to leave it there. Throw a thumbs up there on the YouTube window. Let Google know that you enjoy the show. Put a question, comment, insult below. Let us know what you'd like to see in future shows. Bennett, another great job running this show. We'll try to get you out of here. Thank you. But lots to say in this post-election edition of TA Live. So, guys, thanks so much. TA team, great job. Stay safe out there. We'll see you guys, if not in the Trading Analysis members area. We'll see you next Wednesday. Also, lots happening on the wealth management side. More information forthcoming. All right, we're looking for anybody who would like to have a one-on-one relationship with a quality team. Obviously, with a group that's been involved in the markets for a long period of time rather than marketing. Now we're starting to formalize this into the wealth management side, and we have a very compelling offering forthcoming. So thanks, guys, and we'll see you soon.
Take care.